Alright, everyone, we need to talk. The Federal Reserve just did it again, cutting interest rates by another 25 basis points. But hold up, this isn't your average rate cut. It's a move that could set us up for something big, and not in a good way. Bubbles are forming everywhere: stocks, real estate, Bitcoin. It's like we're living on the edge of a financial cliff. So, buckle up, because by the end of this video, you'll understand exactly how this affects you and how to prepare for what's coming. Look, we've been here before: 1929, 2001, 2008, 2020. Each time, it felt like the good times would never end. Stocks were soaring, real estate was untouchable, and speculative assets, well, they were just insane. Sound familiar? This time, we're throwing money at Fartcoin, yes, Fartcoin, which somehow gained 50% in a week. What's next? A Petrock NFT. The Federal Reserve just gave us a sneak peek at what's coming in their economic projections, and spoiler alert, it's not pretty. Inflation, interest rates, housing prices, it's all connected, and it's shaping up to create one of the most volatile years we've seen in decades. By the end of this video, I'll show you exactly what you can do to protect yourself. Let's start with inflation. As of December, inflation is persistently persistent, climbing 2.7% year over year. Food costs are up. Insurance is up. But hey, energy prices are down 3%. Small wins, right? The thing is, even though inflation is slowing, the Federal Reserve isn't taking any chances. They're holding rates higher for longer, and that could spell trouble for every corner of the economy. Now, let's talk stocks. 2024 was a dream year. The S&P 500 soared over 30%. Incredible, right? But here's the catch. The Buffett indicator, Warren Buffett's favorite measure of market valuation, is screaming danger. At 208%, it's the most expensive market since the 1950s. Some economists are even predicting a 26% crash by 2025. Are they right? Well, that's debatable, but history tells us one thing. When markets get this hot, they tend to cool off fast and painfully. And then there's Bitcoin. In a bizarre twist, Bitcoin hit $100,000 this year, fulfilling predictions that once sounded insane. Companies like Microsoft and Amazon are even considering putting Bitcoin on their balance sheets. But, and this is a big but, when your mom asks you if she should buy Bitcoin, it's usually a sign we're at a market top. Is Bitcoin unstoppable? Or are we just repeating history all over again? We'll find out soon enough. Now, let's shift to housing. Mortgage rates are the highest they've been in over 20 years, yet home prices just keep rising, up nearly 6% this year. Why? Because demand is outpacing supply, and people are willing to pay a premium to lock in what they can. But here's the kicker. Builders are downsizing homes, inventory is creeping up, and markets like Austin and San Antonio have seen prices drop by as much as 40%. Is this the start of a nationwide trend? Akira doesn't think so, but I'm not so sure. Here's where things get real. The Federal Reserve just announced they're cutting rates slower than expected in 2025. Why? To make sure inflation doesn't reaccelerate. That's their plan, but the market isn't happy. Stocks dipped immediately as investors started pricing in higher rates for longer. So what does this mean for you? Think higher borrowing costs for mortgages, car loans, and credit cards. In short, this decision will hit your wallet. Okay, so how do you survive and thrive during uncertain times? Here's my advice. Diversify. Don't put all your money in one asset. Spread it across index funds, bonds, and maybe even a little Bitcoin, just not too much. Build cash reserves. Keep some cash on the sidelines. Trust me, when prices drop, you'll want the liquidity to take advantage. Think long term. Ignore the noise and stick to a consistent investing strategy. The market's wild swings are scary, but over decades, they balance out. Protect your assets. Whether it's insurance or estate planning, make sure you're covered for the unexpected. Boring? Maybe. But boring works. Here's the million-dollar question. Is this the next Great Depression? The truth is, no one knows. But the signs are eerily similar: high valuations, speculative bubbles, and market euphoria. What we do know is that history rewards those who stay disciplined. Don't chase the hype, and don't panic sell when things get rough. Stick to your plan. And here's something no one's talking about. The Federal Reserve has a lot of power, but even they can't control everything. Political pressure, market manipulation, and unforeseen events could derail their plans. Remember, they didn't predict the 2008 crash or the COVID shock. Could 2025 be another blind spot? Look, I get it. This stuff is scary. But fear often creates opportunity. When others panic, that's when you stay calm, analyze the situation, and make smart moves. The biggest returns often come after the darkest moments. So don't let fear paralyze you. Use it to stay sharp and focused. Now it's your turn. What do you think about the Fed's latest move? Are we headed for a crash, or is this just another bump in the road? Let me know in the comments below. And if you found this video helpful, please give it a thumbs up and subscribe. It helps more than you know. Together, we'll navigate whatever comes next. Thanks for watching, and I'll see you in the next one.